So our first company today is Sonoro Gold Corp, and it will be presented by its CEO, Ken McLeod. Ken, welcome to the Metals Investor Forum.
Thank you, John, and thank you for the very informative update on your views on the market and the gold market going forward. Truly appreciate that. And thank you, Matt, for putting on this very, very important forum for Sonoro and the other companies. So going forward here, this project that we're going to focus on is called the Cerro Caliche project in northern Mexico. And the picture you're seeing on the screen at this time is the central part of the concession. We're looking at the parts of the concession that are called the Japonesa zone, the Buenas Suertes zone, and the Cabeza Blanca zone. And 85% of the drilling that we've done, and the drilling accounts for 47,500 meters of drilling, mostly over the past 3 years, 85% of it is within the zone here. And the majority of the resource that we're going to be discussing in the slides going forward are focused in this zone here. So you can envisage that this is the central area of potential open pit mine in the future. Going forward, the forward-looking statements, I have to illustrate those for you and caution you that we are going to be talking mainly on the basis of forward-looking statements and the historical data that we've amassed over the past 3 years. We have a technical team in Mexico that I believe is second to none. I'll just focus on the two key guys, Melvin Herdrick, VP Exploration. He's got over 40 years experience in the development and exploration of gold mines in Mexico and in the United States. And he's been a contributor to over 5 million ounces of gold discovery over that 40-year period. Jorge Diaz, our mining operations manager, he has over 40 years experience in developing mines in Mexico as well. And he is well known to the likes of Alamos Gold. He was the #1 employee of Alamos Gold when they started developing the Mulatos mine. The location is about a 3-hour drive south of Tucson, Arizona, and a 3-hour drive from the Cerro Caliche project to Hermosillo, the main center of commerce in northwestern Mexico. We are surrounded by producing mines, and I'll highlight some of those. Agnico Eagle's Santa Gertrudis project, which I anticipate will be going into production in the near future, is 14 kilometers to the north of us. We have Mercedes Mine, now owned by Equinox Gold, 8 kilometers to our southeast on strike on the same structure. And adjacent to us on the west is the Cerro Prieto mine, and a little further to the west, about 60 kilometers, is the San Francisco mine. And I'm sure many of you are familiar with that. The PEA that was announced yesterday came with highlights based upon $1,750 gold with an NPV after tax of $41.5 million US, which is about $53 million Canadian. I want to emphasize that contrasts with today's market cap for Sonoro, which is about $21 million. So there's a bit of a disconnect there. The after-tax IRR currently is 32.5%, and the initial capital costs are rated at $32.2 million. I want to emphasize with these capital costs that this is based upon brand new equipment. The initial plan was to go into production with a leased or a rented crusher, but the fact that we couldn't find a 3-stage crusher in Mexico forced us into going out for quotes for brand new crushers, and which we have, and that added an extra 12, actually, or more like $13 million to the capital costs. And so when you strip the crusher out, if we are still able to lease a crusher or rent a crusher, the capital costs would diminish quite substantially down to the less than $20 million figure. However, even taking into account with brand new crusher, new grasshoppers, new conveying systems, the leach pad expansion after 2 years, the payback for the $32 million capex is just over 2 years. The life of mine currently is 7 years, and I want to emphasize that this is a single moment in time for the project. The intention of Sonoro is to continue with the drilling program, and the drilling program is anticipated to start in the next 30 to 45 days in order for us to continue to upgrade the size of the resource. And over the past 7 months of drilling, we added about 25,000 meters of drilling. So if you can envisage over the coming 7 to 10 months, we should add another 25 to 30,000 meters of drilling. I think the likelihood is very strong that we will be able to substantially increase the size of the resource based upon our track record over the past 3 years. Now, the all-in sustaining cost that we're showing here right now, $1,351, incorporates all of the costs, including the reclamation at the end of the mine life. It includes the expansion of the leach pad. And so if we are able to successfully acquire a leased crusher or a used crusher, these sustaining costs will come down substantially, and so will the cash costs. The recovery rate has been very, very attractive for us in that McClelland Laboratories out of Reno came up with a 74% recovery rate, and that is fairly consistent across the entire area that we envisage will be mineable over the coming years. The average annual production in the first 3 years will be in the order of about 56,000 ounces. And over the following 4 years, which takes us up to the 7-year mine life, it should be just about 45 to 50,000 ounces per year. That is without any additional drilling to add to the resource, and our focus will be to add to that resource. The capital costs, as you show here, are mainly, once again, the cost for the crusher is almost $13 million. And that is the total direct cost of $19 million, infrastructure of $4 million. EPC, we've allocated 13%, 12.5% for EPC costs. And then the indirect costs are shown there. So the total capital costs amount to $32 million. The operating costs, let's go for the life of mine first with utilizing the $1,750 gold price. The cash costs are $1,227 and the all-in sustaining $1,351. But in the initial 3 years, because we have a higher grade in the first 3 years, that higher grade is over half a gram, it gives us a lower cash cost of $1,159. And an all-in sustaining cost of under $1,300. This gives you a snapshot of the mineral resource as calculated by Micon, and the measured and indicated is 349,000 at a grade of 0.41 grams of gold. And when you add the gold equivalent in there, the grade is 0.43. The inferred at 71,000 ounces is in the order of about 4.4 grams. And then potential outside of the resource pit shells. And I want to show you, I'm going to see if I can demonstrate a bit. Oh, no, I can't. It seems to be wavering on me. The pit shells are shown in a dotted line in the map to the side here. The area outside of the pit shell that has been partially drilled, but which is not drilled to a standard that Micon can classify as inferred or measured and indicated. That gives us an extra 204,000 to 365,000 ounces of gold, as you can see on the side of the slide here. So obviously, that's going to be a major focus for us going forward to take that potential and turn it into a resource over the coming year. And then going forward, this snapshot here is of the drilling that's been done to date. The 47,500 meters of drilling are in these areas that mostly 85% of it would be in this central area of the Japonesa zone, Buena Suerte, and the Guadalupe zone, and the Cabeza Blanca zone. So the area off to the north here to El Rincon is a brand new zone we discovered last year. And the expectation is that we will continue to do some additional drilling here so that entire area will become a productive mineralized zone over the coming year. Now, we have identified an area to the south of El Colorado and Buena Suerte, which I will show in a future slide. This area has never been drilled before. In fact, it has not been explored until recently because it was a steep canyon, no roads into there, and there was a bit of overburden. So we've been building roads into this area now over the past few months, and the road cuts are giving us some very significant intercepts. We're getting, with channel sampling, we're getting 1 to 1.2 meters of up to 10 grams in places. And so it stands to reason that the area to the south of Buena Suerte into the San Quintin area, and from Colorado into the La Ventana area, which is just slightly off the map, may become mineralized as well, and we will be drilling there over the coming months as well. The extension for Buena Suerte is another 750 meters that's of potential mineralization. For Colorado, 650 meters. And an area off to the east here from La Española to the north towards La Magdalena has now been identified with some significant structure being exposed through our trenching and with sampling and trenching and the various road building we've been doing in that particular area. And off to the northeast, there is tremendous potential for mineralization there, because as we're building roads into the area, and this is Cerro Caliche Peak itself, we're finding that the mineralization is fairly consistent all the way up to Cerro Caliche Peak. The area in green is shown as where we have the mineralization present at this point in time, where we've done enough drilling to show the mineralization. Some of the cross sections to show you how easy it is to mine. We're showing mineralization essentially from surface. This one here, the Buena Suerte zone, you can see very, very high grades of 24 meters of over a gram, 27 meters of over a gram, and essentially at or near surface. Same with the Japonesa zone. A cross section across the various zones is we're finding that there's stock work in between the vein breccia zones. So it is essentially potentially mineable right across the structure. The next phase of exploration will be, and I can't show it to you very clearly in this map here, but it's south of the Colorado zone and south of the Buena Suerte zone, and we are highly encouraged by the sampling we've done at surface with the road building. Going forward, I'll summarize the activities going forward. We intend to restart the drilling in the next 30 to 45 days. The idea being we start off with an RC, and then we'll bring in a core rig to get definition on structure in the new zones. We've now effectively completed the PEA, except for the completion of the actual language within the PEA itself, and that should be completed early in October. We've been conducting studies and engineering, pre-engineering on the potential mine over the past few months, and that will continue into the future. We're talking to EPC contractors with a view to obtaining a potential contract to eventually build the mine. Project financing will be done in conjunction with these EPC contractors, and there are other potential sources of financing that could be brought to bear as well. The environmental permit is anticipated by early in the new year, and so potentially, if all of these elements are brought to bear in the coming months, we should be in a construction phase in 2022. Summary on the structure of the company: 100 million shares issued and outstanding, just 102 actually. And as of yesterday, 2 days ago, we were trading a 35 cent range. We got hammered when we put out the news release on the PEA. We feel very confident that the PEA is very, very complementary to our future plans, and that it is eventually going to be supporting a future mine. But excuse me a second. The future mine is anticipate to actually be constructed sometime in 2022. We still have more drilling to do to realize a potential longer mine life than 7 years. But some of the shareholders in the company over the past 24 hours decided that for one reason or another, that the PEA was not to their satisfaction. But we feel very strongly in the opposite direction because the value is very, very significant. And if you look at the potential for producing over 55,000 ounces a year for the first 3 years, with if you use a $1,750 strike price or spot price, and the potential for the all-in cash cost to be in the $1,300 range, I think there's a potential there for a significant increase in the value of the company, and over time an increase in the share price. So that summarizes it now, and I thank you, John, for the introduction and for the good words about the company.
Thank you, Ken, for that presentation. Our second